Hello, good morning. This is Market Cafe and I'm Pani Motiwala along with me, Sneha as well. Snehi, a very good morning to you. Happy Monday to you as well. And yes, we're on the red and the green sitting there, but which side is the market going to pick? That's what we're watching out for. Absolutely. But how was the global handover coming in this morning?
Good morning to you as well, Winnie, and happy Monday if it can ever be one.
Yes.
But let's quickly see what the global handover looked like on Friday as well as over the week. Now let's start with the US markets then, and the US stock markets will be closed today for the Juneteenth holiday. And the US markets ended lower on Friday with the NASDAQ declining almost 0.7%. The S&P 500 fell approximately 0.4%, and the Dow Jones Industrial Average declined almost 0.3% to end the week at the 34,300 mark. Now comments from two Federal Reserve officials curtailed optimism that the central bank is nearing the end of its aggressive interest rate hikes, and losses in technology, consumer services and financial dragged the US markets lower. Let's see what the US markets did on a weekly basis. Now, for the week, the S&P 500 rose 2.6%, so quite an uptick there. The Dow added 1.2% and the NASDAQ gained 3.2%. The NASDAQ logged its 8th consecutive week of gains, the S&P 500 gained for the 5th consecutive week, and the Dow Jones gained for the 4th consecutive week. Now let's look at what the European markets did, and they closed higher on Friday as investors digested the latest monetary policy decision from the European Central Bank. They've decided to go with a hike of 25 basis points more, and the Pan-European Stock 600 index ended 0.5% higher, with most sectors and major bosses closing in the positive territory. Now household goods stocks led gains with a 1.8% uptick, while mining and technology stocks ended 0.5% lower and 0.3% lower respectively. But this is what the global handover looked like, fairly positive from the US, a little bit of a mix from Europe. But Winnie, on that note, why don't you take us through what crude did over the weekend and what other commodities did?
So crude at some point of time was gaining in trade, but now it's come off those high levels this morning. We're seeing a bit of a decline there, some bit of a correction coming in this morning in terms of the Brent crude oil prices. Let's look at in terms of what we're seeing. They've mainly come off. Why? Is because earlier, what we saw in terms of the gains there as banks cut China's growth forecast. So because of that, obviously in terms of the top consumer over there are demand issues that come in from there. That does in turn impact the crude oil prices as well. Now globally, we've seen them coming off a bit from the last week gain in terms of what is going to be the situation from China that mainly outweighed the OPEC plus the output cuts that saw in coming in as well. And that is a main factor that is coming into play in terms of the Brent crude oil prices as well. This morning, as of now, when you look at the Brent crude oil prices, they are at around 75.78 as of now, which is, yes, about that $75 per barrel mark, but it's closing towards that 75 mark. So that is one to watch out for, because seeing it a bit of a fall coming in this morning. As of now, Brent crude oil is down almost 0.6% in trade. So yes, keeping an eye on that one. While in terms of obviously what is WTI crude oil doing, $71 per barrel mark is where WTI crude oil is at. Looking at the gold prices, they're a bit wobbly in trade, with a hawkish Fed outlook, weaker dollar. These factors come into play for the gold prices, so they're still a bit wobbly on that front, but keeping an eye on that. That's the update coming in as of now in terms of the commodities as well.
Alright, so that's what happened at the commodities front over the weekend. But let's quickly look at all the important cues that you should be watching out today as well as over the course of the week. And over June 22nd and 23rd, you will have the US initial jobless claims numbers, US existing home sales, and the S&P manufacturing and services PMI. So watch out for that. On the UK front, over 21st to 23rd June, you will have the CPI number as well as the S&P manufacturing and services PMI. On global cues front, on June 20th, China loan prime rates, the number will be out, so keep an eye out for that one. On the global cues front, from Eurozone, from 22nd to 23rd of this month, you will have the Eurozone consumer confidence, UK Bank of England rate decision, and UK Bank of England retail sales number coming out, along with Eurozone S&P manufacturing, Eurozone services PMI, and other events. So on that front, on the 19th of June, you will have Ukraine, which is seeking to add Russia to the blacklist, which is happening today. So important global cue coming there on the geopolitical front, so keep an eye out for that. Other than that, ECB's Francois Villeroy-de-Galhau will speak in Paris today. Important speech coming in there, so keep an eye out. And on the 20th of June, which is tomorrow, PM Modi will begin his state visit to the US, And on the 22nd of June, Fed Chair Powell will deliver his semi-annual testimony. Now, on the 23rd of June, James Bullard will speak at the Central Bank of Ireland. So important speeches, important people speaking at different podiums. So keep an eye out on all these cues all over the week.
Absolutely, a lot of cues coming in and something important to watch out for. But let's take an update on the global news flows that we have coming in over the weekend as well as on Friday overnight as well. Now, U.S. Secretary of State Anthony Blinken held candid talks with Chinese counterpart on his two-day visit to China. Blinken emphasized on the need for diplomacy and keeping open channels of communication. China's Foreign Minister Qin Gang told Mr. Blinken that Beijing was committed to building a stable, predictable and constructive relationship with US.
And in the latest on the cash-strapped lender Silicon Valley Bank, which has now entered into an agreement to sell its investment banking division, SVB Securities. The buyer will acquire the investment banking unit for a combination of cash, repayment of an intercompany note and a 5% equity instrument. Now, this deal comes after FDIC's takeover of the Silicon Valley Bank in March.
The latest on Russia-Ukraine front, Ukrainian troops have recaptured a village in the west of the Zaporizhzhia region. Now, amid the fierce frontline fighting, this is Kyiv's second gain on that front since it's launched the counter-offensive earlier this month. Russia's defense ministry said on Sunday its forces had repelled attacks across 3 sections of the front line, adding that Ukraine was pressing most actively in the Zaporizhzhia region.
And shifting focus to France then, and the country is now making a major push to enable its artificial intelligence foray in Europe. AI was the phrase on everyone's lips at France's annual technology conference, VivaTech, from startups to established technology firms. Emmanuel Macron added that they are prepared to make investments in the space like never before, largely aided by their access to talent and startups.
And 3 different incidents of a mass shooting has once again rocked the US and could reignite the gun control debate. In Chicago, at least 29 people were shot, including 2 children, during the Juneteenth celebration on Sunday. Reports suggest 1 person has been killed in that incident. Meanwhile, Washington police said that 2 people were killed and 3 others injured after a shooter began firing randomly in a crowd at a music festival. Another attack in St. Louis left at the 1 juvenile killed and 9 others injured.
Unfortunate news coming there from the US, but let's move on then. And as chorus grows for need for proper regulations for norms of artificial intelligence, nations too have expressed concerns and have swung into action to adopt a balanced approach to AI. My colleague Sumita Karir gets us the extensive report on the different steps taken across the globe. Sumita?
Elon Musk. AI is potentially more dangerous than nukes. Sam Altman says he's a little bit scared of the AI technology. And global tech CEOs mentioned that mitigating the risk of extinction from AI should be a global priority. I can name a few more leaders, but you get the point, right? AI, the poster boy of tech, is driving global leaders racing to establish guardrails around regulating what could possibly lead to mass-scale disinformation, deepfakes, job losses, and perhaps a literal threat to humanity. Sam Altman, to underscore this point, in fact, has been meeting world leaders on regulations. But what do the draft regulations look like in some of the countries that have developed some draft guidelines? Let's take a look. Let's take a look at EU, because EU has taken the first step by passing the Act. The AI Act assesses risks considerations of the superintelligence, and these risks can be classified into unacceptable, high risk and unregulated. And it's the high risk category systems which will be assessed before being put on the market. Other than that, AI technologies will have to comply with transparency requirements. They'll also need to disclose that the content was generated by AI. It also requires safeguards for preventing illegal content. It would also ban companies from scraping biometric data from social media to build out databases. And then there's an absolute no for social scoring systems. Let's take a look at China, because that's the other country that's shown considerable progress. So China's cyberspace regulator in April drafted measures that included firms to submit security assessments before launching their offerings. More importantly, it will focus on the country's socialist values, and AI systems need to reflect that. Then there's scope for prohibition of profiling based on user activity and retention of data. Very interestingly, these regulations also cover aspects like how AI systems are trained and how users then interact with them. AI companies are also restricted from using personal data as part of their generative AI training, and failing these would invite fines. US. Even though the United States is still playing catch-up on AI laws, but reportedly the country is pushing for reforms that will rein in social media companies for content, including AI content on their platforms. However, chances of having an overarching regulation seem slim, although lawmakers would keep a watchful gaze on AI, according to reports. Reports are also suggesting that guardrails around AI would center around preventing discrimination and protecting user privacy.
Okay, thank you so much for that, Sumita. But let's move on. And ace stock pickers Piyush Gupta and Vijay Kedia share their top ideas. Let's go across and listen in.
The restaurant of Asia, the Burger King company. So this is a beautiful business. It's in the infancy in this country. Last few years, they have been struggling with many things. And now this company owns the business of Burger King and Popeye in Indonesia also, the same listed company in India. So I feel they are well set for growing much faster and, creating cash flows in the future. For me, if you ask me, Tata Group is going to outperform all other groups in the coming years.
Index is a counting of 21 is happening index, 21,000, 42,000, 63,000. And I think that next stop should be 84,000 in 2 years from now. And of course, 100,000 is just a destination, I think, and miles to go for index. The only bet I have taken in electric, maybe some small startups. I have invested in some 2 or 3 some small startups, but significant investment I have made, that is a Lotto. And I am bullish.
Okay, that's the word coming in from ace stocks pickers Piyush Gupta as well as Vijay Kedia. But with that, let's quickly slip into a very short break. Don't go anywhere. More news and updates on the other side.
Welcome back, and you're watching Market Cafe on ET. Now, let's look at what the Asian markets are doing this morning after the handover that we have coming in from the US markets. Asian market seems like most of them have opened up in the red, nothing exciting coming in there. All of them are trading lower because US markets also ended lower. Let's look at what the Hang Seng is doing. Okay, we have the Nikkei on screen. So we talk about Nikkei first because Nikkei was down almost 0.4% in trade. We have the Hang Seng that's down almost 0.7% in trade as well. Nothing exciting there. Let's look at what Shanghai is doing as well. That too is seeing a decline of around 0.4% in trade as well. While in terms of Kospi, that too is down almost 0.8% in trade. So when you look at most of the Asian markets, they have opened up in the red. We should have a look at what the ASX 200 is doing as well. That's the Australian market as well. That's the only one as of now when I'm looking at it is trading with a bit of green and up 0.3% in trade. Other than that, everything as of now in the Asian market seem to have opened up in the red as well. And when you look at the SGX Nifty, what is coming in is also, yes, 18,891 is what it is standing at, about that 18,800 mark, but still almost flattish in terms of the trade when you're looking at it, nearing that 18,900 mark in terms of SGX Nifty. But absolutely a flat start. So maybe we could see a negative bias coming in, given that how the indication is coming in from the US markets as well as the Asian markets opening up weak this morning as well, Snehi.
Absolutely, Vinny. SGX Nifty indicating a rather muted start, preferring the color of your dress over mine today. But welcome back. You're watching Market Cafe on ET now. Let's move on then, and with a view to push for upgrading India's sovereign ratings, officials from the Finance Ministry, led by the Chief Economic Advisor V. Ananta Nageswaran, met senior executives from the credit rating agency Moodys. Moodys currently rates India at Baa3 with a stable outlook. ET Now's Sumit Chaturvedi is standing by with all of those important details. Sumit, tell us how you are reading this move by Moodys.
Indian government officials have met officials of Moodys Investment Services. A strong pitch was made and an appeal for upgrade of the country was made, which is currently at lowest investment grade at Baa3 from Moody's side. Upgrade means that there will be less borrowing costs for investors, and also country is perceived as less riskier. Sources say that overall the meetings were held in very cordial atmosphere. There was no comparison with any country, or there was no question raised on the methodology of the overall ratings, how they are undertaken. India has made a strong pitch based on the disinvestment, also state borrowings, also state budgets. They all were discussed. India made a pitch saying that disinvestment should not be looked at from the point of view of revenue generation, but it's a exercise which in fact improves the health of the economy. Keeping all that in mind, the pitch was made with the Moody's investment officials. Before that, S&P and Fitch, the overall pitch were made with them as well. It's a yearly process that happens every year. Also, there are other parameters on which Indian economy may be assessed, including overall GDP growth. India still remains the growing economy. So in the meeting, the overall economy was pitched in the manner that the ratings, sovereign ratings of the country should be upgraded from currently Baa3 from the Moody's side.
Okay, thank you so much for that. But let's move on and talk about some update coming in on GST evasion. Now, Finance Minister Nirmala Sitharaman chaired a review meeting of the ongoing drive against the fake bill for GST evasion. The administration has detected 11,140 bogus registrations, and action has been initiated against them. FM instructed officials to strengthen the GST registration process to curb the entry of such fake entities into the ecosystem.
And coming in from the Economic Times this morning then, and Bharti Airtel is evaluating an offshore bond issue to raise up to $1 billion or about 8,200 crore rupees to refinance high-cost debt, fortify its balance sheet and meet a portion of its 5G capital expenditure needs. This is what the Economic Times has reported. Now, this is coming in for refinancing high-cost debt, fortifying balance sheet and meeting the 5G capital needs, as I mentioned.
Okay, surely keeping an eye out on that one. But as of now, we do have Manapuram Finance that is in focus as well, and will be in focus after the Kerala High Court has quashed the FIR against the company, which could actually help in faster resolution in the ED cases. While that overhang will go, the company still has to pay a fine of 20 lakh rupees that is demanded by the RBI for certain non-compliance measures. Somit is joining in with us with a detail on this. What's the update coming in here, Somit?
Well, there are a couple of news flows coming in from Manapuram Finance. The first positive one is the fact that the FIR, which was the basis on which the ED had conducted investigation under PMLA on Manapuram Finance, now that has been quashed by the Kerala High Court. Now, quashing of the same should significantly improve the chances of the ED case getting resolved quickly, and if that happens, then this was a major overhang on the share prices of Manapuram Finance, which would go away, and the focus of investors would now completely again shift to fundamental improvement or fundamental growth going forward for Manapuram Finance. So that is the positive news coming in. On the negative side, RBI has fined around 20 lakh rupees for non-compliance with certain provision. Now, RBI action is based on deficiencies in regulatory compliance according to the filing. Now, during FY21, an annual inspection by RBI had made observations on loan extensions given to existing customers and also alluded of evergreening of accounts. Now, management was served a show cause notice back then, and the hearing was ongoing, and finally RBI has come out with a fine of around 20 lakh rupees on Manapuram Finance. Now, RBI has imposed this penalty for regulatory non-compliance for non-classification of certain overdue accounts as NPA, which is a tantamount to evergreening of accounts. And the second reason for this fine was non-compliance of mandated LTV of 75% on certain accounts during FY21. So a couple of news flows, but the positive news flow coming in from Manapuram Finance is the fact that the Kerala High Court has quashed the FIR, which was the basis on which ED had conducted investigations of the company.
All right, thanks Somit for all those details on Manapuram Finance. Let's move on then and listen into the top India inquiries like Vallabh Bhansali and Shankar Sharma. They talk about where they see the economy headed and on India Inc. in general. So let's go across and listen in.
There aren't many countries where we have the three balance sheets all aligned, all healthy. That I call only solvency. It has already, established its value as a regulator, as being now we are ahead of the curve or all along the curve. We are not behind the curve in any manner. Now, whether from a growth point of view or inflation point of view, I think we will have a right to ask for manufacturing, space, manufacturing, should I say, supply status. Until then, it was not expected. But now it is inevitable, I think. So it's going to happen. I had just little doubt about it. The manufacturing boom is coming.
Ease My Trip is a different kind of company. It is actually probably the best one of the new age companies, at least, in terms of it's profitable, it's bootstrapped. It's not been burning cash like the other startups. So that's one of the preferred ones in the overall ecosystem of new age listings. But there are companies which are into visa processing, which in my view, after COVID, the whole world tours and touring, traveling, etc., is in an upward momentum. We see data from across the world in terms of travel bookings. So all that benefits a particular company listed in India. So I'm really optimistic on the services space, on the manufacturing space as well. Some very interesting plays out there.
Okay, those were the big market voices. But on that note, viewers, we're going to slip into a very short break. Don't go anywhere, because after this break, we'll be back with more stock-specific news. Which are the stocks to watch out for in trade this morning?
Welcome back to Market Café. We now have Ansh joining in, who's going to take us through a list of all the stocks that might be buzzing today and the ones you need to keep an eye out for in trade today. Ansh?
Hi, good morning. So Grasim would be the first stock in focus for today's trading session. On June 3rd, Grasim had announced that a fire had broken out at the manufacturing facility in Karnataka. Currently, the company is assessing the extent of the damage and finalizing the claim amount to be finalized for insurance reimbursement. The replacement of some items are still in progress which were affected due to fire. Apart from that, Trident will also be in focus, as company has incorporated a wholly owned subsidiary called Trident Global BV in Netherlands. The purpose of this subsidiary is to engage in the wholesale business of textiles, paper, non-food consumer goods and clothing accessories. Moving on, Kalpataru's projects board of directors will be meeting on 21st June to consider raising of funds. Karur Vyasa Bank will be inaugurating 10 new branches on 19 June. Team Lease will also be in focus, as the company has completed buyback of 3.3 lakh shares. Lastly, there's an update on HDFC and HDFC Bank. HDFC Bank had requested RBI to provide confirmation about the commercial papers of HDFC Limited, in reply to which RBI has now advised it may hold the commercial papers that were issued till date by HDFC Limited till their maturity, and that it shall not roll over or reissue any commercial paper after the effective date of the proposed amalgamation. So these were the stocks that would be in focus for today's trading session.
Absolutely. We will keep a close eye on all the stocks this morning, but obviously keep an eye on Titagar Wagons as well, because we have a brokerage that has come in from Antique and seems like they're bullish on this one and they've initiated a buy. Ashesha is joining in with us to give us the breakdown of what has actually come in the brokerage note, what is making Antique bullish on Titagar Wagons. Ashesha, good morning.
Well, yes, railway stocks have been buzzing over the last many trading sessions, and today, of course, Titagar Wagon, one specific stock that will be in focus, and this is on the back of a note that has come in from Antique, where they've initiated coverage with a buy rating and they've given a target price of 694 rupees per share. Antique believes that this is a jewel in the making. They say that company has created a manufacturing setup which its peers will not be able to replicate. As far as their turnover targets are concerned, Antique says that the company has the ability to increase its turnover to about 10,000 crores over the next 5 years. This will indicate an earnings CAGR of 53% over the period FY23 to 26 and a return on assets of over 25%. They also say that the stock is not expensive at this juncture and it does not capture the long-term potential of the company. For now, they have initiated coverage with a buy rating and a target price of 694 rupees per share.
Okay, thank you so much for that, Ashesha. But let's move on to talk about Britannia, because some of the analysts actually managed to visit the Ranjangaon plant, and this is going to be one of the largest plants that the company has. The company is targeting the capacities for most of the food categories as well, and obviously this further gives in that aspiration that the company has to become a total food company. So pushing that forward as well, because here when you look at it in terms of the manufacturing line, it's firstly, let's not forget, it's a fully integrated plant built across 146 acres of land, and the scope is further increasing for Britannia in terms of more brownfield expansions that we could see coming in this premises as well. So the total outlay or the capex that we could look at for the plant would be around 1,500 crores, and obviously in terms of just wide space that is there in the facility grants Britannia to actually have an ability to ramp up its capacity by 50 to 60%. Now, currently the plant accounts for around 10 to 12% of the company's total volumes. It could go up to that around 15-16% mark going forward as well. Company level, when you look at it overall, the in-house manufacturing that is going on, it contributes around 60 to 65% of that production, while the plant currently has 9 biscuit lines, 2 cake lines, that's a adjacency business as well. They have 1 line for rusk as well, 3 dairy lines as well, and 1 snacking line. So most of these productions are already coming in over there as well. And when you look at it, what the company is focusing on also, they have a separate line of making cheese, but that is currently made via contracted packers. Now that could change, and we could see that coming in here as well. And in terms of dairy also, the in-house production is likely to start by May 2024 post the trials that are pushing. So obviously that's going to be positive coming in, because more of the capacity that they'll be having, integrated line of capacity coming in from the Ranjangaon plant, and that is going to be interesting how that actually shapes up for Britannia.
Absolutely. And another stock that will be in focus today will be Moil on the back of its management meet. So let's take you through the key takeaways of that meet. Now they've given the FY23, FY25 volume CAGR guidance at 20%. Incremental production seen from mine expansion is what the board is saying. Is what the management is saying. Now cost of production to be rationalized at 6,500 rupees per ton in FY24. That's the word coming in. Followed by that, they see stable absolute cost and the next wage revision after 10 years. Now, considering huge export dependence, the volume synergies of 200 KTPA from GMDC JV is what they're also seeing. And they also see no difficulty in getting mining lease renewal. So this is what the management meet of Moil consisted. These are the key takeaways of that meet. So keep an eye out on that stock.
Okay, surely keeping an eye out on that stock this morning, but we have Lisa joining in with us, and there's a brokerage note that has come in on NBFCs. Which of these NBFCs are included? Is it a positive one? Lisa, take it away.
Well, yes, so a couple of brokerages have come out on a note on NBFC sector, and they're quite bullish on it, JP Morgan as well as HSBC. Now, what JP Morgan is saying that the NBFC sector loan growth that is high and it's outpacing banks, and even HSBC, they are of a similar view, as they say that the outperformance in the NBFC sector that could continue as the EPS CAGR that diverge versus the banks, it's quite high, and an earning upgrade cycle that is also underway with multiple drivers in place. Well, HSBC has hiked the target price for several NBFCs like M&M Finance, Bajaj Finance, Chola Investment, SBI Card, L&T Financing as well, L&T Finance as well as LIC Housing. For JP Morgan, the top picks remains Bajaj Finance as well as L&T Finance. Now, why Bajaj Finance? Because they believe that the earnings compounding, the earnings compound will be around 25% over the next 3 years, and for L&T Finance, the valuations remain quite reasonable and attractive. And JP Morgan is also of the view that the investors, given the historical challenges in NBFC, they have under-allocated on the sector. But given the state of the credit cycle and also the macro setup on the rates, JP Morgan believe that the investors will add this NBFC to their portfolio. So that's the word coming in from the brokerages on NBFCs.
Thanks, Lisa, for all those details. Now, let's revisit that interesting chat we had with Enam Holdings' Manish Sethi on the occasion of ET Now's 14th anniversary.
Look at people outside, they're very enamored by the Indian consumer. Yeah. So you'll find all the consumption stocks, the discretionary stocks are all pricing in 10 years of growth. I think the pricing is wrong there. The thesis is correct. Eventually, we'll have a J curve. But before we get there, we need to lift that per capita income up, which we are stuck at whatever, $2,500 or whatever number. But before that is to happen, a lot of the jobs in manufacturing, the jobs in infrastructure, the build out of India has to occur. So if you were to kind of phase it, the next couple of years is really the period of infrastructure, capital goods and defense, railways. All these companies are really going to benefit a lot. And I don't yet think the prices have captured that fully. As you continue, again, our old theme, the financials, are at the center of everything. So while the last few years they've all gone after the retail guys, I think this whole corporate banking, the PSU banking pack, if you take the top 3 or 4 banks after SBI, they're all in 30,000 crore type PPOPs, looking evident, which are large numbers. SBI will be north of maybe 1,25,000 crores. I don't know. I think you just interviewed the chairman. The numbers are going to be staggering coming here. HDFC itself will be probably close to a 1 lakh crore PPOP. So the numbers that will start coming out are going to startle people and shock them. And therefore, things which have kind of underperformed, think, oh, everyone owns banks and financials are over-owned, overexposed. I think over the next 4-5 years, the leadership of this market will be very strongly with this entire group.
So if I say that banks is a consensus buy in terms of a view,
sure,
but it has not reached consensus pricing, will I be correct?
I think, see, look at it this way. Everyone knew 10 years ago that Amazon, Apple, Microsoft are spectacular, and yet the biggest wealth creation came there because the percentage churn
Great point.
on large numbers, the delta that you make on the wealth is, sometimes you miss the point on just looking for percentage gains, but on a large position, if it then multiplies from there, the absolute impact on your portfolio is very, very large. So today, it's become very popular that, oh, you must keep churning and moving, or it's a technical trade that HDFC Bank will see selling pressure and so on, let me get out, or PSU banks are now done and so on. All these
tracks it all up.
all these favorite PSUs
Even on holiday he was working.
around 4-5 multiples on current earnings, and you haven't yet seen the acceleration which is happening here. If we all believe that we will get to 5 trillion and we continue with this 20% type saving rate, it's $1 trillion of saving, and we are financializing the economy. And we've got RERA in, where now you can actually build the whole mortgage business out as well. So you don't need to put hard cash down for everything. Just imagine the staggering numbers that start coming out over here. And really, for the growth of the country, you need, construction, real estate, infrastructure spends, because they create jobs, they consume steel and cement. And that starts lifting then for the workers the per capita income, which allows them to go buy eventually then the cars and the ACs and the fridges. So I think that cycle has started. We're in good shape.
So what is your son buying? That's a better question to ask.
Yeah,
He's the one who bought Gravitas.
Yeah. What is that one mid-cap that you think has the potential to become a large cap? Not now, in the next 10 years.
We had bought IDFC for, in that context, that it's not the SBI, it's not the ICICI, which yet. Also we've done very well.
Yeah.
But I think he has the characteristics to, build something of great value over there. It's played out very well, so I'm not suggesting, and I don't really want to suggest any stock for anyone.
Sure.
So
now, of course,
take that
disclosure,
as a standard thing.
Sure.
Please do your due diligence.
Yeah,
These are not recommendations. We are generally having a chat.
thematically about India and where it's going. And there's just so much opportunity.
Okay, from one big market voice to another, and not just market voice, we also have top bosses of India talking to us as well. Now, we caught up with Piyush Gupta, and he sounded very bullish on the Tata Group stock, sounding very bullish, especially on Tata Communications and Tata Consumers. Not just that, we also spoke to the top boss of Tata Consumer Management, that is MD and CEO Sunil D'Souza. Let's go across and listen into what Piyush Gupta had to say on the Tata Group, as well as what Sunil D'Souza had to say on Tata Consumers and the growth ahead.
We have gone very in depth into the stock, and after Tata Consumer, perhaps I remember even Nikunj was very, very optimistic about Tata Consumer when it used to be at one time revenue market cap around 8,000 crores a few years ago. Now it has moved to 80,000 crores, of course, including the business of Tata Chemicals. So I'm seeing a similar opportunity in Tata Communications. It's a new age business. Some people are liking only new age business, the digital business. And here is a company, I think the Tata Group, as such, they are very optimistic when you listen to their calls and all. They are talking about doubling the digital revenue. The growth in these Tata companies could be higher than the peer companies, like Hindustan Lever or whichever field they are competing with the MNCs traditionally. So that higher growth and much better management cost-efficient operations, and Tata big name. So these all are making Tata Group itself. For me, if you ask me, Tata Group is going to outperform all other groups in the coming years.
Become a large food and beverage company first and then venture into larger FMCG. We will do this both organically and inorganically. And when I say inorganically, we've clearly defined the entire food and beverage space as of today, where we want to play, which are the categories that we will focus on, size, margin, competitive intensity, our ability to create value, our R&D, our distribution, marketing capabilities. And therefore also define the spaces which we will grow inorganically. And the reasons for that is either time, energy, effort to grow in those spaces. Organically will be very tough. So at any point of time, we remain in discussions with at least 3 or 4 different opportunities across the place. But as we've always mentioned, we will never be in a hurry. We will make sure that we will create value both from a strategic point as well as a financial point. So unless we find all these boxes getting ticked, we will not make a move. But when we make a move, remember we've got about 3,000 crores of cash on our books. Balance sheet is very strong. So if we see value, we will not hesitate to make a move.
All right, let's shift focus to the aviation space then. And India's largest airline, Indigo's board, is likely to approve an order for 500 Airbus A320neo family aircrafts today. While the stock will be in focus on the back of that news flow, Vijay Kedia, who's the MD at Kedia Securities, sounds very bullish on Indigo. Listen in to what makes him bullish on this airline company and his overall outlook on the aviation industry. And then let's also hear out the management of Indigo.
I like airline stock and I have invested in that. I've invested in Indigo. That is again a disclosure and disclaimer. Of course, I'm not a consultant, so I don't recommend shares. This is what I have done just for the benefit of your viewers. I've invested in Indigo, being the largest company and the most profitable company in airline sector. And I am bullish in airlines. I think what had never happened in maybe 20, 30 or 50 years in airlines industry should happen in next 5 years. This is, as on today, when I'm talking to you, I have this opinion. Airlines is a sunrise industry. In spite of all those bad things and about bad cash flow and whatever negative, opinion of others.
Prices are always a dynamic equation, and that's not unique to India. You see that pretty much actually all over the globe. And if you see now some reports coming from Europe or from the US, where July and August are really the peak summer, you see prices going up there as well. So today's situation with fluctuations in pricing between high and low season clearly are there and will remain to be there. I think more recently, of course, the sudden disruption in terms of capacity deploy by the suspension of flying by Go, that of course has created some, I would say, temporary disruptions in capacity and consequently pricing. But as you rightfully so says, we're sort of coming to a situation where things are more stable now, and that will also mean that prices are stabilizing to that level. The government has taken its role and its responsibility, and rightfully so, by addressing the issue, and we as airlines do our best to follow that guidance and to make sure that air travel remains accessible.
And let's bring on some more big voices from the market. We were joined by Atul Suri as well as Sameer Arora to talk about their views on the market on our 14th anniversary. Listening to what they see in terms of where the market is headed and which are the interesting stocks or sectors that they're looking at.
Couple of years is really the period of infrastructure, capital goods and defense, railways. All these companies are really going to benefit a lot. And I don't yet think the prices have captured that fully. As you continue, again, our old theme, the financials are at the center of everything. So while the last few years they've all gone after the retail guys, I think this whole corporate banking, the PSU banking pack, if you take the top 3 or 4 banks after SBI, they're all in 30,000 crore type PPOPs, looking evident, which are large numbers. SBI will be north of maybe 1,25,000 crores. I don't know. I think you just interviewed the chairman. the numbers are going to be staggering coming in. HDFC itself will be probably close to a 1 lakh crore PPOP.
So for that, my simple thumb rule is compound at about 13-14% and see whether 1.14 to the power of 5 into 66,000, does it become 1 lakh or no? So plus minus it would be there. But right now, yes, right now, next at least 30-60 days, because I can't commit here forever. Depends on how the prices move. But right now, I would think that they are there for.
All right, and with that, we're completely out of time on this edition of Market Cafe. But stay tuned to ET Now as the market takes all the action ahead.